What if I told you that right now, while most investors are chasing yesterday's winners, there are 10 companies sitting quietly in the market that could potentially double, triple, or even quadruple your money by the end of 2026? I'm not talking about meme stocks or lottery tickets. I'm talking about real businesses with genuine catalysts, explosive growth trajectories, and structural advantages that Wall Street is only beginning to understand. Today, I'm going to show you exactly which stocks have the setup, the catalysts, and the momentum to potentially explode over the next 2 years. This isn't about hype. It's about finding asymmetric opportunities where the potential upside dramatically exceeds the downside risk. Before we dive in, here's my framework for identifying these opportunities. I'm looking for 5 key criteria. A massive addressable market that's growing rapidly. A company gaining market share, multiple catalysts over the next 18 to 24 months. Reasonable valuation relative to growth, and some element the market is currently underestimating. When you find companies that check all 5 boxes, that's when you get those explosive moves that can transform a portfolio. Number 10 on my list is Eli Lilly. What's happening with weight loss drugs is genuinely revolutionary. Eli Lilly's drugs, Mounjaro and Zepbound, are taking the market by storm. And we're still in the early innings of what could be a multi-hundred-billion-dollar market. The data coming out on these GLP-1 drugs isn't just about weight loss anymore. We're seeing potential benefits for sleep apnea, cardiovascular disease, kidney disease, and even Alzheimer's. Right now, less than 2% of eligible Americans are on these medications. If adoption even reaches 10% over the next few years, we're talking about demand that could overwhelm supply for years. The margins on these drugs are incredible, often north of 80%, which means every dollar of new revenue drops almost directly to the bottom line. Wall Street analysts are revising their peak sales estimates from $10 or $15 billion annually to 30, 40, even 50 billion or more, just for Eli Lilly alone. Number 9 is Taiwan's semiconductor manufacturing company. My foundational bet on AI and advanced computing. TSMC makes the most advanced chips in the world. They're the only company that can manufacture at the bleeding edge of semiconductor technology. Every major AI chip from NVIDIA, every Apple processor, every advanced AMD chip, they all come from TSMC. AI demand is accelerating, and every new generation of AI requires even more advanced chips. TSMC is raising prices because demand exceeds supply for their most advanced nodes. They're bringing new fabs online in Arizona, which will reduce geopolitical concerns and could lead to valuation expansion. The beauty of TSMC's business model is that they don't compete with their customers. They're the Switzerland of semiconductors. Number 8 is NVIDIA. I'd argue we're still in the middle innings of the AI infrastructure build-out, not the late innings. NVIDIA has created a platform that has become the de facto standard for AI computing. Their CUDA software ecosystem means massive switching costs and network effects. Everyone focuses on their AI training chips, but NVIDIA is also dominating AI inference, which is where you actually run AI models in production. As AI applications proliferate, inference is going to become a much larger market than training. The company is guiding for continued triple-digit growth in their data center segment, and they're still supply constrained. If you believe AI is going to continue transforming every industry, NVIDIA is the most direct way to play that trend. Number 7 is Constellation Energy. Constellation is the largest producer of carbon-free electricity in America, with a huge fleet of nuclear power plants. AI data centers consume absolutely enormous amounts of electricity, and as companies build out AI infrastructure, electricity is becoming a major constraint. Microsoft just signed a deal to restart the 3 Mile Island nuclear plant to power their data centers. Google, Amazon, and other tech giants are scrambling to secure long-term power purchase agreements. Nuclear is the only technology that can provide massive amounts of carbon-free baseload power 24/7. Constellation owns the assets these tech companies desperately need, and they're signing long-term contracts at very favorable prices. This is selling picks and shovels to the AI gold rush from an angle most investors aren't focused on. Number 6 is Shopify. My bet on continued e-commerce growth. Shopify powers over 2 million merchants worldwide. They've completely restructured their business, selling off logistics operations and refocusing on their core platform, which has incredible unit economics. Shopify is integrating AI throughout their platform in ways that genuinely help merchants sell more. With tools that write product descriptions, generate marketing content, provide customer support, and optimize pricing. They're expanding into point-of-sale systems for physical retail and B2B commerce. What I love about Shopify is the business model. They take a small percentage of every transaction plus subscription fees, which means as their merchants grow, Shopify grows automatically. The company is now solidly profitable and free cash flow positive. Number 5 is Alphabet, Google's parent company. Alphabet is trading at less than 25 times earnings for a company still growing revenue in double digits. Google search is still growing despite everyone thinking AI will kill it. YouTube is an absolute monster that could be worth more than Netflix standalone. Google Cloud is growing faster than the market, and they're particularly strong in AI and data analytics. The company generates around $70 billion in free cash flow annually, which they're using for buybacks. The market is worried about AI disruption and regulatory risks, which is why Alphabet trades at a discount to other mega-cap tech stocks. But Alphabet is one of the leaders in AI research. They literally invented the transformer architecture that powers modern AI. Number 4 is Cava Group, my restaurant growth stock. Cava is a fast casual Mediterranean chain with around 350 locations, planning to open 50 to 60 new restaurants per year. The unit economics are fantastic, with new restaurants generating strong returns and reaching profitability quickly. The Mediterranean diet is one of the fastest growing food trends in America, and Cava is the best positioned brand to capitalize on it. Their same-store sales growth is consistently strong, running in high, single to low, double digits. The company just recently went public, so they're still relatively undiscovered. We've seen that when a fast casual concept gets the formula right, they can expand to thousands of locations. Cava is still in the early stages of that playbook. Number 3 is Advanced Micro Devices, AMD. AMD has been taking market share from Intel in data center CPUs for years, and that trend is accelerating. In server CPUs, AMD now has over 30% market share heading toward 40% or higher. On the AI side, AMD's Instinct GPUs are gaining traction with major customers. Big tech companies want to diversify their chip suppliers to avoid being over-reliant on NVIDIA, which creates a massive opening for AMD. What makes AMD potentially explosive is that they're at an inflection point where multiple growth drivers are hitting simultaneously. Data center CPU share gains, AI GPU ramp, new product cycles in gaming, and expansion in automotive and industrial. Number 2 is Uber. Most people still think of Uber as a ride-sharing company that burns cash, but that's outdated. Uber is now a highly profitable marketplace, generating several $billion in free cash flow annually. The rideshare business is mature and profitable. Uber Eats is growing fast and approaching profitability at scale. Uber is building a super app that's becoming essential infrastructure for urban mobility and logistics. The company is moving into autonomous vehicles by partnering with companies like Waymo. When autonomous vehicles scale, Uber takes a cut of every ride without having to build or maintain the vehicles. The international opportunity is massive, with Uber leading in most major markets outside China. Number 1 on my list is Palantir, my highest conviction play for 2026. Palantir is a data analytics and AI platform company that's now profitable and generating significant free cash flow. Their commercial business is exploding, growing at over 40% year over year. The catalyst is their AI platform, which allows enterprises to deploy AI on their own data securely. They run boot camps, showing customers how to build AI applications in days, and the conversion rate is incredibly high. What makes Palantir special is they embed deeply into customer operations. Once a company builds critical workflows on Palantir, switching costs are enormous. Palantir is also getting huge tailwinds from increased defense spending globally. So there you have it, 10 stocks that I believe have the potential to explode in 2026. Let me be crystal clear. I'm not telling you to buy all 10 stocks tomorrow. Every investor's situation is different. You need to consider your own risk tolerance, time horizon, and financial goals. What I'm giving you here is a framework and specific ideas to investigate further. If you found this valuable, hit that subscribe button and let me know in the comments which of these stocks interests you most.